Hello, folks. Welcome once again to another tutorial with Sanz Virtual Enterprise. I hope everyone is staying safe, doing well during these uncertain, challenging, crazy times right now, and that you are making the most of it until we get through this. Today, we're going to talk about distributions versus drawings versus dividends versus salaries and wages versus contractor fees. This is one of those discussions I've been wanting to have um, for a while now. Just never had the time to get around to it until now. There's a lot of confusion going on with these different um, accounts, these different terms, as far as for financial statements and for tax purposes. All right, with that said, let's jump straight right into it. Chit chat a little bit. First up, distributions. Distributions are withdrawals of after-tax income from an S corp by its owner or shareholder, and therefore it is tax-free to the owner, shareholder, on the personal taxes level. Okay, that's because it came from after-tax income. All right, keywords: after-tax income. Then it is tax-free at the personal taxes level. Okay. Here's a financial statement illustration to show where distribution is on the financial statements. It's on the balance sheet and it's a part of equity. Okay, it is a deduction from equity. All right, let's move along. Drawings. Drawings are withdrawals of after-tax income from a sole proprietorship or partnership by its owner or partner, and therefore it is tax-free to the owner partner on the personal taxes level as well. I put an asterisk there because with sole proprietorships, uh, they don't have two separate tax returns that you have to file. It's not like you have to file a Schedule C, prepare and file a Schedule C and send it off, and then prepare and file a 1040 separately and send it off. That's not the case. Okay, so the Schedule C is a part of the 1040 tax return. Okay, therefore the personal taxes level and the business taxes level, they're all one and the same. With the S corporation, we have where you file the 1120S. You prepare 1120S and you file that separately, and then you prepare and file the 1040 separately. Two separate returns. There's a definite distinction there. Also with a partnership, you prepare and you file a 1065, and then you prepare and you file a 1040. Two separate returns, two separate due dates. Everything is separate, not with the sole proprietorships. All right. Financial statement illustration. Drawings, that's a part of equity. Again, it's a deduction from equity. Again, it is tax-free at the personal taxes level because it came from after taxes income. Okay. Here's the exception. Dividends. Dividends are a type of distributions of after-tax income from an S or C corp, and also select forms of partnerships. Okay, by its owners or shareholders, but it is not tax-free to the owners or shareholders on the personal taxes level. It is double taxed. It is taxed at the personal taxes level as dividends income. You are familiar with dividends income, similar to interest income. Okay, so again, we had distributions came from after-tax income, and it was tax-free at the personal tax level. And we had drawings, the same thing, came from after-tax income, and it was tax-free at the personal taxes level. Dividends here also comes, also come from after-tax income, but it is not tax-free. It is taxed at the personal taxes level. It's double taxed. Here's financial statement illustration. So dividends again is a part of the balance sheet, specifically part equity section on the balance sheet, it is a deduction from equity. All right, and then asterisk again is there. Show that dividends are taxed at the personal taxes level. It's double tax. It's food for thought. Stay away from dividends if you can help it, especially if you're a small corporation. You're paying yourself. It wouldn't make sense to pay yourself salary and also pay yourself dividends. Um, Anyways, salaries and wages. Salaries and wages are payments from pre-tax. This time it's pre-tax, not after-tax income from any business to its owners, shareholders, or employees in general. Of course, we know salaries and wages are taxed at the personal taxes level via the W-2. So now it's flipping now. This is the flip side. So before the first three, uh, distributions, drawings, dividends, okay, um, those were from the balance sheet, okay, and the distributions and the drawings, those were tax free at the personal taxes level. Here we have salaries that are taxed at the personal taxes level, okay, and we know that, but it is tax free at the business tax return level. Here, financial statement illustration. Um, Salaries and wages, expense, deducted from income, we end up with net income before taxes, aka taxable income, aka earnings before taxes. Okay, obviously you can see that salaries and wages are not part of taxable income. Okay, they escape taxes. They're not part of taxable income at the business taxes level. It is 100% allowed deduction from income. It's not a deduction from equity. Distributions, conversely, are not deducted from the P&L. So you don't have a line item where you could say, well, I'll pay myself a distribution so I could escape taxes. No, distributions are not deducted from income. That means distributions are included in taxable income. That means distributions are taxed, okay, at the business tax return level. Now, when it gets over there to your personal tax return, yeah, of course, then it's not taxed at that point. Okay, all right. A little note at the bottom: gross income is not equity. However, net income is a part of equity because net income flows over to the balance sheet as part of retained earnings. Okay, let's move along. Contractor fees. Contractor fees are payments from pre-tax, again, pre-tax, not after-tax income from any business to its contractors who can also be owners or shareholders and the likes. Contractor fees are taxed at the personal taxes level. Okay, so we know employees, they receive salaries and wages, and then year end, um, file their taxes, they'll receive W-2. Contractors receive contractor fee, year end, they'll receive a 1099 miscellaneous income document for them to file their taxes. Okay, because both are taxed at the personal taxes level. But as we saw on the previous slide, they were deducted from income and therefore, as rightfully deducted from income, 100% deducted from income, then it is not taxed at the business tax return level. Um, here's the illustration again for contractor fees, similar to salaries and wages. It's deducted from income, and for net income, um, which does not include, obviously. Obviously, you can see that contractor fees are not a part of taxable income at the business taxes level. 100% allowed deduction from income, not from equity. Dividends, conversely, are not deducted from the P&L. The same with dividends. Dividends, this is as we were talking about distributions earlier. Dividends are the same thing. You don't have a line item on the income statement that says dividends expense, and then use that as a strategy to escape being taxed on your dividends. That's not the case. Um, there is no deduction for dividends from income. Okay, here on the income statement. So by that fact, then it's going to end up being a part of taxable income on the business tax return. And at that point, you know what happens next. It gets taxed. Okay. Note: gross income is not equity. However, net income is a part of equity. Okay, everyone. This concludes our tutorial. I hope you found it helpful. If you still need some further explanation, you could contact me directly. My contact information is on the screen. Thanks for watching. Everyone, stay safe and enjoy. Thank you.